Hey everyone, and welcome back to Talk Tickers.
It's great to be here.
Today we're doing a deep dive into S&P Global's Q4 2024 earnings call.
Lots to unpack.
Yeah, there really is a lot to go through. We've got record debt issuance, AI innovations, and a peek into what 2025 might hold.
It should be fascinating.
Absolutely. Now, we always start with the headline numbers.
Of course.
The foundation of any good analysis.
Oh, exactly. So let's give our listeners a quick rundown. S&P Global had a strong finish to the year.
Definitely exceeded expectations.
Revenue, excluding divested businesses, was up a solid 15%.
That's impressive given the overall economic climate.
Right. And then there's the adjusted EPS.
Oh yeah, a whopping 25% jump.
Blew past their initial guidance.
They absolutely crush it.
And it seems they're eager to share that success with shareholders.
For sure. They returned a massive $4.4 billion through dividends and stock buybacks.
Talk about putting your money where your mouth is.
Right. That shows real confidence in their future prospects. And speaking of the future, they're projecting $6 billion in free cash flow for 2025.
Not too shabby.
Plus, they've committed to returning at least 85% of that to shareholders through dividends and buybacks.
Music to any investor's ears.
Definitely, especially if you're holding SPGI stock. Now, we can't talk about S&P Global's future without mentioning their new CEO, Martina Chung.
Right. She hit the ground running, connecting with key customers and partners.
It's an interesting approach. Instead of just diving into the numbers, she's really emphasizing relationships.
It's smart. She's making sure S&P Global is aligned with the major trends shaping the market.
So what are those key themes she's focusing on?
Well, practical applications of AI, for one, navigating the complexities of global trade is another.
Yeah.
And then there's the continued flow of capital into passive funds and private markets.
And of course, we can't forget the energy transition.
Huge topic. Everyone wants to know how to play that.
So it sounds like S&P Global is positioning itself as the resource for anyone trying to navigate these massive shifts.
Exactly. They're not just riding the wave, they're providing the surfboard and the navigation tools.
Love that analogy.
Yeah.
Okay, so let's shift gears a bit and talk about that record-breaking debt issuance in 2024.
Almost $4 trillion in bond issuance.
A truly mind-boggling number. Even for seasoned finance folks.
Yeah.
Like, how do you even wrap your head around that?
It's a lot of debt. Companies were rushing to refinance while interest rates were low and credit spreads were tight.
So what happens now? That's got to be a tough act to follow.
Right. It sets a very high bar for 2025. S&P Global is forecasting modest single-digit growth in debt issuance.
But there are some wildcards out there, right?
Absolutely.
Right.
For starters, we have refinancing. Those maturities coming due in the next few years are substantial.
So they could drive more issuance.
Potentially. And then there's M&A activity. If mergers and acquisitions pick up, that could create more opportunities for S&P Global's ratings and data businesses.
So there's potential for upside, but it all depends on how those factors play out.
Exactly. Now, another thing to keep an eye on is a potential shift towards more investment-grade issuance.
Meaning?
More bonds being issued by big, stable companies instead of the riskier stuff.
Got it. So that could impact the overall volume and mix of debt in the market.
Precisely. Now let's switch gears again and talk about market intelligence.
Ah, yes. That segment saw slower growth of just 5% in Q4.
Right. Partly due to some cancellations earlier in the year.
But they did have some bright spots, right?
Oh, yeah, definitely. Strong renewals and some competitive wins in the last quarter. Plus, they have new leadership focused on streamlining operations and their go-to-market strategy.
So they're taking steps to get back on track.
Absolutely. And as the financial services market recovers, we could see that growth accelerate.
Fingers crossed. Now, what really caught my attention was what's happening with innovation, particularly with AI.
They're going all in.
Seriously. They're partnering with UBS on leveraged loan indices. They launched new Platts price assessments for commodities like beef and poultry.
Beef and poultry?
Yep, you heard that right. Even beef and poultry. And get this, they've even introduced stablecoin assessments.
Wow. A first in the digital asset world.
It's pretty remarkable. But the real game changer is their internal AI co-pilot called Spark Assist.
Over 1,300 use cases across the company already.
That's serious commitment. They're not just talking about AI, they're actually using it to boost efficiency.
And they're sharing the AI love with their clients too.
Right. They launched the Kensho LLM-ready API, which allows clients to tap into S&P Global's data and enhance their own AI models.
It's like giving them access to a supercharged brain.
Exactly. Now, how does all this innovation translate to their bottom line?
Well, their 2025 guidance is pretty impressive. They're projecting revenue growth between 5% and 7%.
Not bad, considering the economic headwinds.
And their adjusted operating margin is expected to be between 49% and 50%.
Wow. Seriously impressive margins.
It seems their strategy of focusing on high-value data and analytics is paying off.
And they're guiding for adjusted EPS to be between $17 and $17.25.
That's strong double-digit growth.
And with $6 billion in projected free cash flow, those dividends and buybacks should keep flowing.
Happy shareholders all around.
So they're firing on all cylinders, innovating and delivering value to shareholders. But before we get too carried away, what are some of the potential risks and challenges they might face?
One thing to consider is the impact of rising interest rates on debt issuance.
Good point. Refinancing needs could drive some volume, but higher rates could also make companies hesitant to take on new debt.
Right. And then there's the competitive landscape. It's always evolving.
Other data and analytics providers are up in their game.
So S&P Global can't afford to get complacent. And while their AI initiatives are impressive, they need to stay ahead of the curve.
AI is rapidly evolving. Continuous investment in innovation will be key.
Absolutely. Okay, are you ready for this?
Oh, I am. Let's move on to our This Is Not Financial Advice segment, where we explore a truly outlandish but potentially profitable trade idea.
Buckle up, everyone. This one might just blow your mind.
Remember, this is purely for entertainment purposes and definitely not financial advice.
Don't say we didn't warn you.
Okay, so picture this. Remember that 1% drop in the 3-year refi wall that S&P Global mentioned?
The decline in the amount of debt maturing in the next 3 years.
That's the one. What if that drop is just the tip of the iceberg?
Okay, I'm intrigued. Go on.
What if companies got so aggressive with refinancing back in 2024 that we see a much steeper drop in bond issuance than anyone is anticipating?
Interesting thought. But how do we play that?
Here's the play. We short the iShares, iBox, investment-grade corporate bond ETF, ticker LQD.
Whoa, hold on. You're suggesting we short the entire investment-grade corporate bond market?
That's right. Bold move, I know.
It certainly is, and risky.
Absolutely. Not saying it's a sure thing. But if our theory about the pull forward in refinancing holds true, LQD could take a hit as issuance dries up and prices fall.
I see the logic, but let me be crystal clear for everyone listening. This is absolutely, positively not financial advice.
100%. This is purely hypothetical, a thought experiment to get you thinking.
Always do your own research, understand the risks, and never invest more than you can afford to lose.
Couldn't have said it better myself. Now let's shift gears and take a closer look at another fascinating aspect of S&P Global's business. Their foray into the world of digital assets.
The crypto world.
The one and only. This is where things get really interesting.
I'm all ears. It's fascinating how they maintain such high profitability in such a dynamic market.
Right. What's the secret sauce?
Well, their focus on high-value data and analytics is definitely key. They're not just selling raw information. They're offering insights, analysis, solutions that businesses really need and are willing to pay for.
Makes sense. And their brand recognition doesn't hurt either.
Absolutely. S&P Global is a trusted name. When they put their stamp of approval on something, it carries weight.
Decades of experience, a track record of accuracy and reliability.
It's a valuable asset.
Okay, so we've talked about their financial performance, their strategic initiatives, their commitment to innovation.
Quite a bit to cover.
It really is. But I want to step back for a moment and ask a bigger question. What does all this tell us about S&P Global's position in the market?
They're more than just a participant. They're a leader. They're not just reacting to market trends. They're anticipating them, shaping the conversation, providing the tools businesses and investors need.
And they're embracing technology, especially AI, in a way that sets them apart.
It's not just a buzzword for them. It's a core part of their operations and their product strategy.
Right. And we can't overlook their emphasis on customer engagement.
Martina Chung's focus on understanding client needs and building those relationships is a smart move.
It's about trust and providing real value.
Absolutely.
Okay, so let's dive a little deeper into their 2025 guidance.
They're projecting revenue growth between 5% and 7%.
Which is impressive considering the current economic environment.
And adjusted EPS is expected to be between $17 and $17.25.
Strong double-digit growth.
Plus, with $6 billion in projected free cash flow, those dividends and buybacks should continue.
A sign of confidence in their future.
Now, before we jump into our This Is Not Financial Advice segment,
where we'll explore some more unconventional ideas, I want to make one thing clear. Investing always involves risk.
Of course, past performance doesn't guarantee future results.
Exactly. There are always factors that could impact S&P Global's performance down the line.
It's crucial for investors to do their own research, consider the risks, and never invest more than they can afford to lose.
Couldn't agree more. So with that said, are you ready for our wild ride?
Always. Hit me with your most outrageous but plausible trade idea.
Right, so remember that 1% drop in the 3-year refi wall that S&P Global mentioned?
The decline in the amount of debt maturing in the next 3 years.
You got it. What if that drop is just the beginning?
Okay, I'm listening.
What if companies got so aggressive with refinancing back in 2024 that we see a much bigger drop in bond issuance than anyone expects?
Interesting. But how would we capitalize on that?
We short the iShares, iBox, and investment grade corporate bond ETF, ticker LQD.
Hold on. You're talking about shorting the entire investment grade corporate bond market.
You heard me right. It's a bold move.
That's an understatement
Yeah.
and a risky one.
Of course.
Yep.
I'm not saying it's a sure thing. But if we're right about the pull forward in refinancing, LQD could drop as issuance dries up and prices fall.
I get the idea, but I have to reiterate for our listeners, this is absolutely not financial advice.
We've said it before and we'll say it again. This is purely hypothetical, a thought experiment.
Do your own research understand the risks? Never invest more than you can afford to lose.
Now let's shift gears again and take a closer look at another fascinating aspect of S&P Global's business, their venture into the world of digital assets.
Digital assets? You mean crypto?
The one and only. This is where things get really interesting. It's a bold move, considering all the volatility and regulatory uncertainty surrounding cryptocurrencies.
It is, but they're not shying away from it.
What do you think is the strategic rationale behind this push into digital assets?
Well, it's about staying ahead of the curve.
Yeah.
Recognizing where the market is going.
They see the potential for digital assets to become a major part of the financial landscape.
Exactly. And they want to be a leading player.
So by providing data analytics ratings for digital assets,
They're positioning themselves as the go-to source for information.
in a space that's often filled with hype and speculation.
It's a smart play, bringing their expertise and credibility to a market that desperately needs it.
And let's not forget the potential revenue streams.
As institutional adoption grows, the demand for reliable data and analysis will skyrocket,
So they're getting in early.
staking their claim in what could be a very lucrative market.
It's not just about profits, though.
Right. It's also about innovation, adaptation, staying ahead of the game.
Well said. So to wrap things up, we've covered a lot of ground today.
We have everything from record debt issuance to the evolution of AI.
The complexities of the energy transition, the rise of digital assets.
S&P Global is right at the center of it all,
They're not just observing these trends, they're actively shaping them.
providing the insights and solutions that businesses and investors need to thrive.
Their financial performance speaks for itself,
Strong growth, impressive margins,
and their commitment to innovation and customer engagement.
key ingredients for success.
But as we always say, investing involves risk.
Always. Past performance is not a guarantee of future results.
So do your research, understand the risks, and never invest more than you can afford to lose.
Sound advice.
And remember, all those crazy trade ideas we threw out there?
Purely hypothetical.
Definitely not financial advice.
Just some food for thought.
We're just trying to get you thinking about the market in new and interesting ways.
Challenging those assumptions.
Well, that's all the time we have for today.
Thanks for joining us.
We hope you enjoyed this deep dive into S&P Global's Q4 2024 earnings call. We'll be back soon with more market insights and analysis. Until then, happy investing, everyone.